Well, the rally continues. The post-election rally, we covered it yesterday. Pretty much everything was ripping higher. We covered which sectors, Bitcoin, you name it. You did have Bitcoin make new all-time highs. We'll talk about that today. We also, 2 days post-election. Now we're going to get back to some of our normal coverage, which includes some earnings. We've got some to talk about there. You've got ARM. We've got Take-Two, Qualcomm. We're going to cover that as well as always. We're doing extra time now. So if you've got tickers, throw them in the chat. We got time for them now. We've got some great guests today. Of course, Christian Fromhertz from Tribeca Trade Group is hanging out with us. And then we're also going to bring on our man, Jay Woods, and then our other man, Mark Chaikin. So it'll be a great show today. I'm excited to be here, of course, with the crew. Let's go ahead and get pre-market prep rolling.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All righty, let's go. I know, Elon, we've got some great guests today. It should be a great show. Let's go ahead and bring in my man, Dennis. And Dennis, how are we doing this morning?
And we got Christian here too, and we're doing well. We're starting to figure out all this stuff. Since we've moved over, we're getting to figure out the technical stuff. Josh is in the background, making sure the show goes smooth. Joel's on deck to come on. Obviously, he's just away here, but Christian Fromhertz is taking his place here today. And how's Christian doing?
Good morning, guys. You guys certainly picked a quiet week. Not much going on this week.
Nothing
to start a new platform. But after these crazy, all kinds of moves yesterday. I think it was one of the. I saw someone tweet this out this morning. It was the biggest move for the S&P on a post-election day. So really.
Well, hold on. Maybe it was the biggest gain.
Yes, sorry, the biggest gain. Yeah,
because I did see, I saw someone tweeted out that the moves after every election, after the past, 50 elections or whatever. And in 2008, after Obama got elected for the first time, the market went down more than 5% the next day. So obviously 2008, not the best market environment, but I think a lot of people really thought Obama's going to come in and enact all these socialist policies. And of course, that didn't really end up happening, but the market went down 5% in one day. Imagine I was thinking about that. I was like, I would be freaking out if, the new president comes in or gets elected and all of a sudden down 5%. A 5% move in the S&P 500 is a big move.
Oh, yeah. It's a scary move, and we don't see that as much as we used to because obviously the S&Ps seem to be so diversified and so insulated here, and obviously it's mega cap tech that holds it up as well. Christian, give us the rundown here on the indices. We'll give it a quick 60 seconds. Joel always starts us off. Let us know what the hell's going on.
All right, let me get the old screen share going here. Window. Let's see. Let's get this. There we go.
Boom.
All right, you should be able to see that.
Charts. I think we're going to see it here in a second. Popping up. Can we see it, Josh? I think it's coming. There it is. It's a little delay.
Okay, so I'll just start with kind of a couple of the commodities that I look at during the day. And like crude, there's not much going on here, down 1.3%. That was one thing. Sometimes I like to look at the things, even that didn't move yesterday. Copper was one of those things that was also on the move today. But you could see, you're starting to see some of these retracements that are happening. Like that big move in copper, big red bar yesterday.
Yeah.
And big volume on some of these. Gold was another one too that I always tend to watch. I think always good to watch on a Fed day too. If you're looking for a dip in gold, you got a nice check back to the 50-day moving average. We haven't had that basically since the summertime. So nice check back there for gold. I didn't hear very many people talking about gold. Bonds.
Well, let's talk it for a second. Let's stop and talk it for a second because we don't talk gold that much on this show. We obviously, mention it when it's having a big move, and it did have a huge move here yesterday. We know bonds had a big move. Gold was down significantly. Crude was actually down, but then rebounded there. Is this a rates thing? Is this why gold really getting hit hard yesterday? Probably a rates thing.
And a dollar. The dollar made a big move yesterday too. And the dollar has been moving up, and it completely. Sorry, I got the wrong. ticker symbol in there, but this is UUP. This is the dollar ETF, which had this big move yesterday. And the thing that was kind of a head scratcher to me was this whole move in the dollar that we've seen over the last month and a half really did not affect gold, and it didn't affect Bitcoin at all too. They kind of just decided to do their own things. And usually there is a relationship with the dollar and gold, but that certainly didn't come into play. But yeah, I mean, I think we'll see if this. I think we need, like, you need one more day, and I think sometimes these events can often be. I kind of think of them in terms of an earnings report. Sometimes when there's a big move to the downside or upside, sometimes you want to see a little bit of digestion. So I would be watching this 50-day moving average. Moving on to bonds, which I think will also absolutely be in the spotlight today.
Sure.
They kind of hung out around the lows yesterday. Obviously, yesterday's moves took out the recent range. We talked about this yesterday, that there's still some support down here, so we haven't taken out the year's lows, but I think this will be very interesting. Even though this is 30-year bonds and the Fed controls the short-term rate, there will be some implications there, especially with the press conference. And
I mean, it's just, what we're going to be talking about today, big time here. Obviously, we know short-term rates. AB, you got the tool, you got the Fed tool still handy. I don't know if you do or not, but if you do, where are we looking? Like for today, it's like 93% chance of cutting rates. Is even higher than that?
Yeah, it's even higher than that.
It's 99, I think.
Or is there any chance?
Let me pop it up real quick. And yeah, that's just a free website tool that anyone can
Where do
use.
people get that? Let's share this stuff here. Where do people go get that information?
So it's on CME Group's website. I literally just Google CME Fed Watch tool, and it's the first thing that pops up. And I think so yeah, I mean, that's one of there's a lot of great free resources out there. That's one of them. And so again, we're currently at 475 to 500. And the expectation is that we drop 25 basis points to 450 to 475. There's still a 1.1% chance that we get another 50 basis point cut. You're telling me there's a chance, the old Dumb and Dumber there. So
yeah, 1 in a million, but we got a chance there.
No, Dennis, 1% is 1 in 100.
Actually, 1 in 100. I know, just the Dumb and Dumber reference, but yeah. It feels like 1 in a million here, AB, because it feels like there's no chance of going 50. There's a couple of Fed officials that we're talking about. We don't even know if we need to cut at all.
Yeah, I mean, why not? Why not cut another 25 basis points? Inflation's come down a decent amount. Unemployment has ticked a little bit higher. I think 25 is reasonable. I think that's good. I mean,
sounds like the number.
Yeah.
I mean, I think the press conference, given the 99%, 95%, it's going to happen 25 basis points. What's really going to be interesting is what Powell says in the press conference. Does he adjust his language a little bit after seeing yesterday's markets? Is he going to? I think he could have a little bit of maybe not. I don't want to say hawkish, but maybe the pumping of the brakes in terms of future cuts after this. I think that's really going to be the key for today.
I think so too. It's going to be the commentary. So, we kind of know what they're doing today. It's a matter of what is the outlook here going forward? What is the path? We know they're probably leaning towards continuing to cut. I mean, they're cutting everywhere. Also, Bank of England cut overnight. Canada's just in free fall, the rates, because Canada's going 25. Now they start going 50s because the housing market is kind of a mess over in Canada. Although that's a good thing. Housing prices were too high. Let's bring them down a little bit, but they're trying to pop it back up. So I think we know it's going to be about the path, outline a little bit. Are we getting another one, this year? Probably not. But are we, looking in January, we're looking in February, we're looking early in the year to start getting more 25 cuts? Because that's what the market wants to hear. And the market's concerned that the Fed is kind of just, complacent here. The Fed's kind of happy with where we are. And I mean, when the Fed always says they're data dependent, but, the Fed, we know from history and doing this show for 11 years, the Fed is also stock market dependent too. They do look at the markets and they see what is happening here, and they see the S&Ps at all-time highs, and they see the Qs at all-time highs, and they don't want to be the catalyst here to start allowing inflation to come back in. And I mean, there's also got to be some consideration here. I know it's a run-on sentence, but I do that a lot, to the new administration that's coming in. So does the Fed, Christian, I'll ask you, does the Fed consider, the fact that Trump's talking a lot of tariffs here? I mean, if we're going to talk a lot of tariffs, that can be inflationary in itself as well, because, you got, companies that are bringing in cheap goods, selling them. If they can't bring them in as cheap, sometimes they have to pass those costs on. So, I mean, that could be, a catalyst to kickstart inflation in 2025.
Well, Dennis, I mean, the Fed is not political at all, so I don't know what you're talking about.
No, not at all. Not at all, Christian.
I mean, definitely. I mean, I think that what you're gonna hear is in the Q&A, that type of those types of questions are probably going to come up, and I think he's going to have to try to dance around, Mr. Powell, how he's going to answer some of these questions, because there are a little bit of unknowns, about what and without getting too far in the weeds of like the political talk, but is Trump going to use tariffs as more of a bargaining chip than an actual action? So I think, yeah, I mean, I will be listening to the Q&A very closely to see how Powell navigates through that Q&A. And I think too, like, from a strategy standpoint, which I think is going to be interesting too. I still think a lot of people did not come positioned into yesterday the right way. People are probably going to be looking for some type of dip to kind of get in and try to catch up a little bit. When you start to kind of look at the end of the year, I feel like it's just the beginning of November, but it is November 7th today.
Yes.
But we're going to start kind of the old like end of year rally, Santa rally, all of those things, which are later. We still have plenty of time for that, but I think people are going to want to be positioned for a possible year-end rally. So I think if the market does dip a little bit, it'll be very interesting to see how quickly it gets bought.
That might just be another buying opportunity. Your point. It's hard to get bearish here. AP, give your overall thoughts. I'm going to start going to some stocks, but just the setup here, for the Fed today, and obviously, for the path of interest rates. And what do you think the Fed's thinking?
I think the Fed is probably in the same spot as a lot of big investors are, where there's question marks about which Trump policies are actually going to end up getting enacted. Like you said, the tariffs, not to mention, I mean, should they really do some sort of mass deportation? There's a lot of economists out there that talk about the inflation that could bring, and, type of economic slowdown. Not to also mention Elon Musk and Trump talking about cutting $2 trillion in government spending, and Elon Musk saying, hey, there's going to be some temporary hardship. So like, if all those things truly end up happening, it changes the environment a lot. I'm not bullish on a lot of those things happening. I honestly think Trump could come in and not really change much at all from our current economic policy, and people would be happy and think that he's doing a great job. And you mentioned too that the Fed does watch the market. I think the Fed also, like, you're looking at like Bitcoin at all-time highs, and they're like, all right, like if we cut another 50 basis points, then you've got all this money flowing into Bitcoin in the markets and stuff. So 25 basis points, I think, is good for now. And I think we're all, you talk about the Fed being data dependent. Now we're dependent on a lot of other things too that are really unknown. But again, if I had to give my like just prediction, I don't think all these things that they've talked about that would make these sweeping changes are going to end up really happening, at least to that extent. Let's get into some earnings now, though, because
Can I just cover one before we jump into the earnings? Like, I was just looking at this. So this is the Bitcoin chart. Can we just talk really quick about so on the weekly chart? What is even if you're not like a huge technical analysis person or patterns, what does this pattern look like to you guys on the weekly chart?
It looks like an uptrend now and a breakout.
So I'll give you like a little bit of hint. So this kind of looks like if you're having some coffee this morning, this looks like this is a little bit of a handle here.
Oh, you got like a little cup and handle thing happening.
There you go, cup and handle. And
where's my coffee? I gotta have coffee. I gotta start drinking coffee because I don't have enough energy here, and I'm not even more energy.
All right, carry on. But I'm very
carry on, my wayward son.
I really. Sorry for the
you set it up.
But I really like this chart pattern for longer term. Again, like forget about like day-to-day stuff, but I think this is a really good looking pattern on the weekly chart long term. I think Bitcoin looks very interesting here, and I'm long IBIT, which had a nice day yesterday. So yes,
I have I have the Canadian one, and I forget which one it is. I think it's like BTCC or something. I just have it in my long-term account because it was like the first ETF that I could add to my RSP years ago that was RSP eligible. So I still have that legacy one. I forget where it is. I think it's BTCC. So that's in Canada if you're trading. AB. Where is the earnings? Where are we starting? Which one? Go. We have 200 to cover. We're going to cover every one of them.
Let's start with ARM real quick because we know at the end of the day right now the market is still chip stocks are still the biggest thing. So we'll start with ARM. Hold on, sorry, I've got some other noise coming in here. Let me go close this door real quick. I'll give these earnings real quick then.
Yeah.
So ARM came in with an EPS of 30 cents, which beat the 26-cent estimate. Sales came in at $844 million. That beat the $808 million estimate. Their EPS for fiscal year 2025, they said was going to come in $1.45 to $1.65. The consensus was $1.56. So the guidance really didn't do much to impress investors. Again, you did have that double beat on EPS and sales, but the stock is trading lower this morning by about 3%. It's come back a lot because it got down to around like $134, back up to $140 now. But again, just that guidance, I think for all chip stocks right now, the bar is beat, raise. And if you just beat in line, it's not that impressive.
Yeah, and you got to. Sorry, I was just going to talk about just a couple of the. We actually have a few companies that are reporting in the semis. You got a couple up and a couple down. Qualcomm announced a pretty big buyback program too yesterday. If you want to discuss that one next.
Yeah, we'll go to Qualcomm. AB's got to go close his door here, but Qualcomm beat as well. I still own Qualcomm in the long-term portfolio. Sean Udall gave us this 6 years ago on the show, I think it was, or 5 or 6 years ago. My average cost basis, I believe, is $52, so it was a good one. I've just stuck it in the long-term portfolio and forgot that I've even owned it now. Those are kind of the best sometimes, Christian. Like I know, so here's a question for Christian. We'll go on some tangents here today. We got a 2-hour show here for you guys today. I know you trade and you obviously post your results every month, and we thank you for that because of the pure transparency there. Do you hold long-term portfolios or long-term stocks in your IRA or anything like that? Do you hold like long-term positions, or are you purely a trader?
So the way I tackle it is I've got my trading account where I've got concentrated positions, and that could be anywhere from, depending on how the market's going, 5 to 15 positions is kind of how I normally do that. And then I have another portfolio which I call is like my trend portfolio. I am a trend trader. I follow long-term trends. So I do have a portfolio that I rebalance probably about once every 2 weeks with normal market conditions, more frequently when there's a bit more things going on. Sometimes I'll do that once a week, but yeah, that's kind of my longer term thing. And I'll just sit in trades and I don't basically do much unless something really changes with them, which could be a catalyst such as earnings or something else. But so for instance, we'll talk about AppLovin too. But I've had AppLovin, and I just kind of like let it do its thing, and I do get a little nervous around earnings because of these types of moves. But I do like when they go in this direction. But you have to take the good with the bad. I also had Ferrari too, which went down the other day. And but I mean, this is unbelievable to see this AppLovin, which probably is a good segue. I mean, this stock, this is incredible. This was just at, I think, last earnings. I'm not even going that far back in my chart. And this stock was like just went over the $100 mark, going back to, what was this?
A month ago, a month and a half ago, September. The stock was $87 in September. It's $227 here today. AB, give us those earnings. We're going to just go. We bounced around like 3-4 stocks. Give us the AppLovin earnings here right now. We're going to go into the technicals on this in 1 second, but AB is going to jump into the earnings because they reported last night. It's up 34% more. AB, you're pulling the Joel. Oh my gosh.
I know.
Twice in a row.
I had
I
to mute it because I'm in this communal room and people came in and they were making noise. They have no regard for people that do for people that got laid off and that are doing a morning show that aren't, it's ridiculous.
This is supposed to be a private room here. You got to get a little sign on there that says,
Yeah.
like
Aaron,
live now, please be quiet.
like when 10-year-old boys put a sign up on their bedroom door that says like keep out, like no
That's my
girls allowed
boy.
in
He's
here.
got that exact sign. I could show it to you on his door. Keep out.
No
I
girls
said, could you put
allowed.
please keep out? It sounds a little nicer.
It's funny when you're like a 10-year-old boy, it says keep out, no girls allowed. And then when you're like 20, it's like girls, please come in here. And it doesn't work.
Do you just flip the sign around? Is that like?
Yeah.
That was great. Girls, please come in here. Okay, that was great. Okay.
All right. EPS for AppLovin $1.25. That beat the 94-cent estimate. Sales came in at $1.19 billion. That beat the $1.13 billion estimate. Their revenue guidance was 1.24 to 1.26 billion for Q4. And, they authorized a $2 billion buyback program. So you had the revenue beat, the EPS beat. They talked about strong growth. All is good here, as you can tell by the market reaction, like you guys mentioned, up 35%. And as I'm talking, making the new high of the move. So this thing has just moved higher and then kept moving higher. No dips to speak of.
Yeah,
No dips.
This is straight up momentum, and we've been seeing these when some of these smaller and the ticker symbol, by the way, is APP on this. Some of these growth names, these smaller growth names like this, if they are beating, they are just charging to the upside. And I know Dennis always talks about story stocks like. Reddit is one of those names too that you can kind of just see because there is no major in terms of chart pattern, right? These things are just blasting off to the upside, and if there's no resistance, right, there's just these things are continuing to go higher. This is Reddit, symbol RDDT.
Yeah.
Another one too that had a really nice. I mean, this is Astera Labs that we talked about yesterday. Ticker symbol ALAB.
Yep, it goes.
Yeah, I mean, this is what's fun about breakouts and these smaller cap growth names that once they beat earnings, there's nothing in front of them to say that they can't continue to have this momentum for a few days.
This is such a good point that Christian is bringing up here because we've been in this market where breakouts haven't really been working that well. Breakouts have been, kind of slow. We've had pockets where they've worked, but overall this year, it starts breaking out, but then it's hesitant. People haven't been chasing and following through. The last little bit, I'd say, and especially in the last couple of days here, we're getting massive follow through on some of these moves here. And that's when breakouts, and I know Christian loves this because he's a momentum person. When the breakouts start going like this is where some serious money is made. And I mean, you can bring it to this AppLovin and say, I'm never buying up a stock $60. And maybe that's the case, but there's also trade setups where you can. Astera Labs isn't a bad setup to just look at, just to use this as a teaching tool here. Now that we have a 2-hour show, we do lots more teaching here too as well. So we gap up 2 days ago on the ALAB earnings. It's the gap. Goes from 84 up to $97. Then she peels back and gives you a chance on the second day to 86. And if you're a momentum trader, and I've traded contrarian strategies, momentum strategies, algorithmic, I've traded all kinds of different strategies for different markets. But if we're moving into a momentum market, what I often do is say, well, you don't want to buy a stock after it's gapped up 20%. Mark what the low was from the gap up day. And when we come down to challenge that low, sometimes it's not a bad idea to take a shot. And if you were looking at a lab, you didn't quite get down to that low. It's not like it put in a double bottom. But 84.11, if you're thinking, well, it went up to 90.
Which ticker, Dennis?
Now it's pulling back. I'm looking at ALAB.
ALAB.
Sorry,
yeah,
I bounce around really quick, so it's hard to follow myself even sometimes. Imagine being in my head. ALAB, so, not from 84, I'm saying to 97 2 days ago. Then we peeled back yesterday, gave you a shot down at 86. And now it's up at 98. So I'm saying
that's exactly where I have a trend line. So we're exactly on the same page. I drew this trend line, I think, yesterday. So yeah, I mean, this really kind of helps when these things. It's really, I think it's kind of difficult. There's some traders that are not used to these breakouts. To your point, there's been a lot of when the market's doing a little bit more of like choppiness and so forth, the breakouts don't work. but you have to have a game plan for when they do work too. And I think how you're outlining this trade where you get a check back and you want to see if that
Yes.
check back holds is a great point.
And I mean, this is what all trading is. It's all about setups, and so you can chase stocks, but when you're chasing, I usually like that check back. So, if you're chasing today, and for me, and it's hard, on these stocks like Apple 11 that are gapping up 50, $60 in the day, to just come in on day one, because this could go anywhere. But if you get, like, let's say you get an open a range, a candle, just hypothetically speaking, of like 215 to like 240, and then closes near the high. If it was to check back to the 220 area, you could lean on the previous day's low to try to say, I think buyers may be emerged there. And then you're getting that look at the upside. If it starts taking out the previous day's low, then it starts to get in the gap area. That's where I would cut out. So, that's all just setups. Trading is all just setups. You're going to be right. You're going to be wrong. Having your contingency plan is how you keep in the game here. But, I just wanted to go on that segue there because I think, I think we are kind of moving into a momentum market where it's not going to be just range trading where we buy here, sell here. We may actually have to, if we're moving to a momentum market, do a little bit of chasing.
Yeah, and the chat is bringing up some other examples too. Lemonade was one. I've got Carvana up there too. I mean, these are just monster green channels. Just one other quick tangent, just looking ahead to what other names are going to be reporting, which have that momentum characteristic. Now, again, we don't have a crystal ball. We don't know what names are going to do in terms of that. But I think that you want to, like, two names that are on my radar that are going to be reporting is Upstart. Right, because of the short interest in Upstart, there's still short interest there. Nice turn in this name. I mentioned
What
the
do they
other
do?
day.
I think that's the joke.
AI credit. Come on, and
you would have been okay on CNBC. That's all you had to do was just answer that question. It's like,
right.
Oh no, I'm cracking up here. I don't hear. That was funny.
And another one that reports too that I'm going to have my eye on for potential momentum is Affirm. Affirm is just basically, I mean, nice move yesterday, and this has the you have potential. This has the potential if they do beat that. I will be all over these two names to be watching for trading opportunities.
This stock here too is turning, like, the momentum has just completely turned for Affirm here. I mean, and you got to think about where these stocks have come from. Not saying it's going back to $176 where it was in 2021, but if you just even look at the chart from this year, there was massive resistance in this whole 51 to 52 area. So we're in that area right now. But we have a catalyst, which Affirm, I believe, is reporting tomorrow night.
Tonight.
That could take.
It's tonight.
Is it tonight? Am I on the wrong sheet?
I believe that's what.
It is tonight. It is
trading
tonight.
is.
Yeah. It is tonight. Sorry, I wrote. Yeah, because tomorrow night's Friday. I was thinking it was Wednesday. I'm losing track of days here. We're so busy right now. It's Thursday. So yeah, it is tonight. But this again, and we can go get the expected move here too, has the potential, to break out here on anything good. So sometimes it just takes a catalyst to get above there. But this is a decent setup here, Christian. Are you going to play this into it though? Like, do you have the guts to take it through the earnings report, or would this be one where you look at the earnings report, get the information of the earnings report, and then take a trade?
I might, and this is where position size is really important, because I think looking at the volatility of these moves, I would not be putting on like a stock position that's any decent size, but I may put something that's a very tiny starter. But again, you have to have that scenario analysis and run with, look at that implied move in terms of the options market and what that's telling you. But these names right now are moving. Some of them are moving more than their implied moves, so you have to be careful with that. So run a scenario analysis for stock. I feel more comfortable in the option market. Now, I would not play outright calls or puts because the implied move is just too much.
It's $7.50. I just looked it up.
Yeah. So and Upstart reports after the close.
Actually, almost $8. Ooh.
Yeah, it's a lot, but you could do like a call spread, right? So this way, you're selling that further out call, so you're minimizing, you're taking, you're trying to neutralize that big implied volatility by selling, a further out call. So you're long the short-term strike, and you're short the further out strike, and this way you're neutralizing some of that crazy implied move. And this way you've got a piece of, you're limiting your downside, because you can only lose the premium, and those are binary earnings trades, are very much binary type trades when you use the option market. But at least you have some piece to the upside if these things want to do, an AppLovin or a Carvana or something like that. But they can move also, big to the up and big to the downside too. So you have to be careful of that.
Okay, back to the earnings parade here. We didn't cover Qualcomm. We mentioned it in passing, but I do want to cover Qualcomm a little more in depth on the technicals here, and we'll get AB to give us the actual Qualcomm earnings. I know they had something about a buyback, but what's the earnings on QCOM, AB? It's the trick again, the Joel trick. There you go. Oh, twice.
All right. Hold on one second, because I'm checking also to see if we had any numbers coming out this morning. We did have initial jobless claims and U.S. productivity. So let me give those first, and then we'll go over to the Qualcomm earnings. Sorry, guys, working with one monitor here, trying to get through it. Initial jobless claims came in at 221,000, which was slightly below the 223,000 estimate, but it does look like some normalization there. Because remember, last Friday we got the crazy jobs number. Maybe that was 2 Fridays ago with the hurricanes and everything. And so looks like labor market. So continuing jobless claims, 1.89 million, slightly higher than the 1.88 million estimate. And then as far as non-farm productivity, came in at 2.2%. That was lower than the 2.6% expectation. USA unit labor costs for Q3 was 1.9% versus 1.1%. It was 2.4% prior. So I'm not sure how much the market really cares about these numbers. Let's move to Qualcomm.
It does a little bit, just to stick with it, because IWM, which was way up when we started the show, has leaked the entire gain back and gone red now. So S&Ps, being as diversified as they are, always seem to be holding on well. But if you just bring up the IWM chart here, Christian, you tell a little bit of a different story. Maybe we could just dive into that pre-market action here too. Maybe zoom into a lower chart just to see how significant this fall was here, because all morning we've been up about $1.50 on the IWM. So we are starting to leak here on the IWM, which is somewhat concerning. I mean, it was such a big day. That's the biggest candle, like we were saying, in a long time for the IWM. So keep in mind, that we're leaking here a little bit on the small caps.
Yeah, watch this 236.79 level. That's your first level of support for today. Further down is 234.23. But that's a great catch, because IWM is definitely moving more than the other indices.
All right, now back to Qualcomm real quick. So Qualcomm reported yesterday after the close. Good day to report too, because like we said, everything was ripping higher. EPS of $2.69, that beat by 12 cents. Revenue of $10.24 billion, that beat by $310 million. There, they gave the 2025 revenue forecast of $10.5 to $11.3 billion. That was against a $10.6 billion estimate. They see EPS for Q1 into $2.85 to $3.05 against a $2.86 estimate there. So again, you had the double beat, some strong guidance, or at least guidance on the higher end, I'll say. And the stock traded up more than it closed up 4.2% yesterday and up another 5.7% this morning pre-market. You have given up some of those gains because we got up to about $189 a share, now down to $183 a share. But if you're a Qualcomm shareholder and you're up 10% over the last 2 days, you're feeling pretty good.
Yeah, believe it or not, we actually got up to $193, and I am feeling pretty good. Still long Qualcomm. Technically, this has been a dog. Technically, the stock has underperformed here for the back half of 2024. We had the big run up in November 2023 till the midsummer when the stock went from 110 to 220. And what happens a lot of times is, stock has a huge run up here, and then you got a digestion period where you have the check back and digestion, where you let the company's fundamentals catch up with what the stock price has done. I think above 180, the stock is in breakout. The problem is this breakout that we were apparently seeing here overnight is fading. So you wouldn't want to see the stock start trading under 180. If it can hold above 180, maybe the breakout's intact.
Yeah, exactly. I think that's a great level to watch, because you could look at this. This is the daily chart, and it doesn't have the pre-market activity obviously in here, but you could see this range. So if it begins to break the range, what I would be targeting is about 206 to the upside.
Jumping over.
What do we want to go to next? I see.
Let's bring our first guest of the day. Well, Jay Woods is hanging out backstage, and we know we love talking to Jay, catching up with him. So let's go ahead, and if Jay gives me a thumbs up or a wave or something that he's ready to go, there we go. Let's go ahead, and we've got a guest intro now. Shout out Josh for setting that up. So let's go ahead and roll that, and we'll talk to Jay Woods when we come back. All right, Mr. Woods, how are we doing this morning?
Hey, I'm doing well. Sorry for the screen setup. I was having some technical difficulties. So I'm talking to you from my iPhone, but I can see your charts well, and I look forward to chatting with you guys. Not much to talk about, so, you may have to pull teeth.
Yeah, I mean, nothing's like changed or no big events have happened since the last time you came on, right?
No, I think everything is just kind of boring and bland. But no, it's been an exciting week, and it's going to get more exciting this afternoon. I think Fed policy is going to be secondary. We're going to be asking Jerome Powell, hey, Trump's back. What's this mean for you? Are you going to be able to remain independent? Well, let's not forget who was the one that nominated him in the first place. He is a Trump appointee. He has dealt with Trump before. He's not going to give us any great nuggets. What we want to focus on is what this does to the bond market, the equity market, and what their thoughts are going forward.
I mean, what are your thoughts on the bonds? Let's start with the bond market here right now, because we do have the tale of two markets where the S&Ps and obviously equity markets have been very strong, and the exact opposite has really occurred in the bond market in the last month and a half. It's been very weak. So a significant divergence here. Is this just normalization of the yield curve, or is there something more happening here?
It's a little head scratching. I think there's something more possibly happening. Let's see how we react this afternoon. From a technical perspective, I didn't like how the 10-year, broke that nice little downtrend we've had for, at least 6 months. I'm just doing this off the top of my head. So yeah, it's slightly concerning. Let's see if that quarter point cut and then guidance as to further cuts keeps things and gets things back under 4.3. That would be nice. That would be a good start. But the equities is where my focus is, always will be, and there are some very interesting things happening. I know people may want to chase, but there are a couple catch-up trades here that I think are worth chasing that I would love to dive into. You guys. All right, let's do it. All right. So one of the things we've been talking about, maybe not you and I, but I've been talking about, are these regional banks and how, if Trump was elected, that would be a beneficiary. I thought they'd be a beneficiary based on the trends, regardless of who won. We just threw kerosene on that. And when you look at these things, I go Brian Shannon, old school, multiple time frames. I look at the BKX and the KRE. The BKX, it's gapping up again this morning. But what we're seeing, and Christian, you love these patterns too, full roundabout patterns that are just coming to resistance levels, but they still have a ways to go to get back to old highs. So the BKX closed at 135. I think it's trading 137 in the pre-market. 145 is a level where I think that's a layup. We're going there. And then consolidate or break through. That's the next question. Then you look under the hood at the stocks making moves. Well, we've seen the Goldmans and the JP Morgans, it's those regional banks. So you go even deeper in the woods, you go KRE. KRE's a little more spread out with their allocation of regional banks. So the ETF moves a little bit slower, but that's trading around 67. It's got to 79 to go until we get to that January 2022 high. And then I believe the tailwinds are there. We have an easing environment. We have a president that hates regulatory hurdles. We have an IPO market that's been stagnant at best, that's ready to rip. I think you're going to see regionals, and then maybe, just maybe, we'll see consolidation within the regional banks. They did struggle a year and a half ago. It could be a time where you see a couple of these small regional banks say, hey, let's join forces and become a little bit bigger and make that balance sheet a little stronger. So the regional bank theme is there. And then you got to look at small caps. IWM, my God. And I've been on this, and I hit it like last December, and then it faded. Then I hit it in July, and then it never followed through. Here, I think it's safe to say the IWM, and it could happen as early as today or tomorrow, is going to finally make that full roundabout and test those old-time highs. It's the only major index small cap, mid cap,
Yeah.
you look at even the transports, which I'll talk about in a second, that haven't gotten there yet. So I think it's going to get there. And then the one thing we know is when the small caps come to the party, man, they rage and they move quickly. We saw it yesterday with a 5% gain. Last October to December, we had over a 20% gain. I think it was 23% from October 23rd to December 23rd. So the IWM, it's here and it's a quick play, and there should be some continuation. If we break out, then the risk reward is really set up for that longer term play. But I like that. And then lastly, the transports, Dow theory back in play. Thank you, God. The transports, look at that nice little roundabout breakout. Now, full disclosure, I hate the airlines. I hate everything about them. When they move quickly, and then they just, you almost want to fade it every time. But jets just broke out from a nice downtrend. And then you look at the two, look at that thing. And then you look at the two leaders, the Deltas and United Airlines. You put them back 5 years, they still haven't gotten, they're just getting there to their pre-COVID levels. So I don't expect them to take off. Horrible pun, really not intended. I couldn't think of anything else to say. I don't see them really going much higher, but it's worth watching them consolidate in this area or, look at it. But so what I look at is the transports overall. And you want to talk about continuation patterns, talk about no one talks about those two shippers in the transport, the Matson, the MATX. That's already made the full roundabout, broke out. We called that one in June. So that was a good call. And now Kirby, KEX, its little brother, if you will, is trying to follow its big brother's shoes. And when this can move, like a ship, when it turns around, the momentum comes into it and it starts to pick up some speed. So there are plays within the transports and the average itself where I think you can get a 10% run in the index because of its recent breakout. And we'll be getting, I don't think they have Dow Transport 20,000 hats. And I think 19,000 is a more realistic target over the next, 3-4 months, let's say. And then I'll pause and let you guys hit me with questions, but there are a lot of continuation trade setups that I love too. Amazon being like my favorite looking chart of all time. It's my favorite stock. I own it. And now we have to worry, okay, is Jeff Bezos going to start to take some profits and, throw water on this party? But we did break that Bezos resistance level of 200. Maybe it pulls back there, it consolidates there, and then continues its way higher, or it continues to party on like it started yesterday.
Yeah, no filing here in the last couple of days. So, the market is hopeful that Bezos is going to take a break from the selling. I don't think he's ever taking a break from the selling entirely because he owns so much shares and he still has a pretty nice lifestyle there. But again, the breakout is for real. I'm long Amazon as well. I think I'd be watching, if you do see, a filing to sell stock, then obviously that can put a quick damp. Like I would think the stock would get hit on that filing because right now I think the market is speculating that he's done. Jay, overall market question here, because you brought up the transports, you brought up the small caps, you brought up a lot of stocks that have lagged for a long period of time. We know this market loves rotation. It likes to go from one area of the market to another area of the market. If we start seeing some love in sectors that have underperformed, does that mean the sectors that have outperformed might actually start to underperform? And I'm talking, the elephant in the room.
First of all, yes, rotation, the lifeblood of bull market. We saw it on full display yesterday. What's been getting hit? Utilities and real estate. This was your typical bull market display, bull run. All right, we are buying risk on assets and we're going after some beaten down names. Industrials looking good, materials looking good, energy is the one that's been lagging. It caught a bid. The XOP looks good on the chart. Energy got a nice little bid when Trump took office the first time. It didn't really last that long, but wow, something's changed. And as a technician, you got to pay attention to that gap. And from a risk reward point of view, you use the opening from yesterday, maybe a little lower, and set your stops accordingly if you want to get in, because there is more upside. And these trades can last several days, if not weeks. If you believe the trend has changed, then this is where it will begun. I'm still not really high on the energy sector overall, but as you said, rotation. And we're seeing it. And those utilities are interesting to watch because I don't think, and I say this a lot, These are not your grandparents' utilities anymore. The utility
Yeah.
story has changed. It's a technology story. It's a power story. It's an AI story. We're getting some nice flags, some nice pullbacks in some of these utility names. Constellation earnings reaction was very puzzling to me. I know it came on the heels of Amazon and Talon Energy news that Friday afternoon, but I think utilities pullback is giving someone with a long-term time horizon who believes in this AI and this power play story an opportunity to buy some of these names under the hood, the NEEs of the world, the Southerns of the world, Dominion Resources, letter D. So yes, we are rotating, and yesterday was pure rotation with quote unquote Trump trades leading the way. But I think the setups were there. Even if Harris won, we would have seen some strength, not to the magnitude we saw yesterday. But now let's forget about the election. Let's put it behind us. We can circle yesterday's charts as possible new breakouts, new continuations. Because when I look back at the 2016 election, when I look back at the 2020 election, guess what? New trends started that week, the week after. So I don't think this is a one and done story. And there are some continuation charts. My God, the cyber trades, the software stocks, IGV. You pick your favorite cybersecurity. I go with CIBR, but hack, bug, they look good.
Movement.
Yeah, I mean, there's a lot to be upbeat about.
Sorry, I was just going to mention that was a great point about some of the utility companies and some of the ones that have the AI theme to them. And VST just reported this morning, which is right in that wheelhouse. And it's a great point that Jay brings up. And VST, you could see what VST is doing. So this is technically a utility, and it's on the pre-market highs right now. Ticker symbol VST is trading above 136. Carry on. Sorry about that.
No. Thank you for bringing that to my attention as I look up the chart. It's been one of the best performers this year, if not, I think it's the top performer in the S&P 500. And what has it done? It's flagged going into earnings, and that's a beautiful setup. Let's see if we can clear 140. But wow, this is exactly what you want to see from a technical perspective. Plus, it has the fundamental story behind it. So that is what I've always tried to do when I was a trader on the floor before I became what is my title? A market strategist. I just, I knew the fundamentals, but I only price pays. That's what I was on the floor to do, to trade, to make money. Now I try to put them all together. And if you can paint a beautiful picture like we see in Vistra, this stock is not done. And yes, it's one of the best, it's if not the best performing stock in the S&P 500. It's got room to go, and it's got a story behind it. So to me, these are stocks you just want to own and put away. And I want to ask this astute group a question, because I don't trade minute by minute like I used to. And yesterday was one of those days where I was jonesing to get back into it. Very happy looking at the long-term portfolio, but DJT, I need an opinion. I want to hear from the trading community that will be in your chat, that will be probably, delinquently, and I say that with love. I don't say you're delinquent. And listen, if I was home, and I was during the GameStop meme crisis, I traded those things. My TV's called GameStop. My couch is called AMC. It's true. You look at these. You yelled at the dog. Get off AMC. But right now, you basically have setups in day trade setups in this DJT that I think the fade is on. What are you guys? Are you guys trading it, first of all? Because Dennis, you're a delinquent. Please speak on behalf of the.
I gave a setup on the show yesterday in the pre-market when the stock was 44. I actually retweeted that last night for people who want to see it again. Just saying the problem here, is it's kind of like a buy on the rumor, sell on the news event, and it was catalyst driven. So DJT was catalyst driven, where everybody was excited, with Trump moving up in the polls. It was the way to bet on Trump. And then the election happened and he won, and all of a sudden the catalyst is gone. So I gave this setup yesterday saying when it was at 44, I said I'd be very surprised if it went back to 50, and I would not be surprised if this continues to leak. That has obviously happened. 44 to 31, I made a little bit of money on the short side on this. It's at a support level from a technical perspective of 28 to 29. So people who maybe were playing that trade yesterday, it's kind of a logical place to bring it in here today. But without a catalyst, here it's difficult. And then the fundamental story, people are talking on the fundamental story is pretty much non-existent.
Do you know they released earnings on election day? No one talked about it. Not one person.
I know.
Yeah,
I know, because I was using it as an indicator, Jay. So I had the Trump indicator was DJT in the corner. I was like, oh, DJT's tanking. And I'm like, oh, there must be something in the polls, something early coming out. And I was like, oh, no, my God, they released earnings. I'm like, and then my buddy was saying that there goes our indicator right there. But
it
didn't matter.
It didn't matter. It was a proxy for the election. I as I said on a different show, is GameStop on steroids. I've never seen anything like that. And I just hope people made money trading it, but my God, it had $1 million in revenue. It has no user growth. And then the guy that uses it only has 7 million followers, 57% of the float he owns too, by the way. And he's tweeting. So if Elon Musk doesn't save him, if Elon Musk doesn't save him, which is not out of the realm of possibilities, I don't see how, one, he can unload these shares without a massive, what institution is going to be like, yeah, we'll put on a block for you right now. This seems like a good trade. You know how many analysts cover the stock? Zero. No one wants to touch this thing. So it has become a day trading dream or nightmare, depending on what side of the road you're on. But for those in it, congrats if you made money. I don't begrudge you. My best friend bought puts in it yesterday. He's loving life. I just wanted to hear your take on it, because I know you guys do follow these things a lot closer than me. It's not on my radar.
I was just going to add one point too. When you look at the option market too, it's very important with some of these names that have an event such as what happened with the election. But looking at the implied volatility of what's going on with the stock can also tell you the story too, because the implied volatility of this was about 215, right? That's the high that it got right before the election. And yesterday it closed below 160. So not only do you see it in the price that I've got on the screen, but also looking at the once the implied volatility starts to drop, right? That especially and you have to be very careful trading in the options market. You actually want to be selling. What one of the best things to do is to be selling premium in that situation where the option implied volatility is dropping, because you're going to get your biggest bang for your buck by selling things like out of the money calls. And I wouldn't do that, given the risk with this, but maybe selling a call spread is where you want to be really collecting that premium by using that big trade. And it basically works the same way as an earnings trade, right? Implied volatility and volatility rises into an event, and once the event is known, the cat's out of the bag. That volatility, you get that vol crush, and that's exactly what's going on with DJT.
Yeah. Well, hey, let me give you one last chart to put up there. XBI. Put up XBI in a 5-year. You can go weekly if you want.
Do it.
All right. We're looking for something that's been dormant for a while. And then what is a catalyst for biotech to do well? Well, one of the things President Trump did while he was in office, he had Operation Warp Speed. We focused it was on COVID, but it was also on cancer drugs. It was also on a lot of these biotech drugs, where he wanted to cut a lot of the red tape to really push these to the market, push them through their test phases. Nothing has changed in his thinking like that. This stock or this ETF, I mean, there's Biogen is killing me. My God, BIIB. That one, oh, good Lord. What happened there? But the XBI itself is a great basket of biotech stocks. And you get close above 103, we're going to 120. And I think that's a safe bet. We're talking 17 to 20%. And then where are we? 140. Where's the all-time high? Well, it got a little out over its skis like a lot of things did in that November run-up in 2021 at the end of the rally during the great SPAC boom. Remember that one? But biotech looks like it is the next sleeping giant. And I was surprised it didn't wake up yesterday. So keep an eye on that. I would use buy stops, and you get something like a 103.5 buy stop. You may get momentum into that. So that's the other sector I'm watching.
That's music to my ears, Jay, because I am long the XBI January 103 calls. So I'm looking for I love your technical level too. I'm
Hmm.
looking for a move up to 128, and it's so nice, and the price action is so tight here. I was
Hmm.
surprised too. I mean, we did close pretty decently yesterday in this, but I mean, I think it's set up. It just has to kind of break, this tight price action, and if it can break above this 104 level, I'm with you. I'm all aboard on this one too, and I'm using the all aboard for your transports, which is a great point to bring up what those have been doing as well.
Yeah, Norfolk Southern NSC.
Yeah.
That just broke out. That looks like a 300. It's a 277 last I looked. And who knows what it's doing in the pre-market? But these setups are just beautiful. And speaking of beautiful, it was great to join you guys. I got dressed up for you. I see you
I
didn't
know.
get the
I'm
memo.
impressed. I love it.
I took the
I
jacket
got
off.
dressed up too, Jay.
And hey, it's great to see you. I'm sorry I had some computer issues and I'm in a weird box for
You look
your
great.
viewers. But shout out to the great people in the chat. I'm sure they're ripping me apart, but that's fine. They're still great people.
They love
And
you, Jay. They love you. We all
no one
love
loves
Jay Woods.
all right. Well, listen, I love you guys, and we'll talk soon. Happy trading, and let's go XBI. We got it. Talk to you.
There you go.
Thanks,
I'm
Jay.
with you too, Jay. I'm long too. Thanks, Jay.
All right. Thank you, Jay.
One
All right,
thing
guys,
to
that was
consider-
Jay Wood,
Yep.
one of our
Go ahead.
favorite guests we bring on here on Pre-Market Prep. We also have another one of our favorite guests hanging out backstage that we'll get to in a few minutes. Mark Chaikin making his long-awaited return to Pre-Market Prep. In a couple months since we've caught up with Mark. So excited to get his thoughts on this ever-changing market and everything that's happened.
Just to
we do
continue
a
the
couple-
XBI thought, just before you move on here,
Yep.
one thing to consider, I'm long XBI in the long-term portfolio as well. Be looking at it for a trade here today. XBI is very rate sensitive. So stuff that moves on the Fed, there's certain stocks that are like, yeah, we don't really care that much about the Fed. XBI absolutely cares about the Fed. They want to know the path. Rates, why are they so rate sensitive? Because it's a lot of borrowing is done in these smaller biotech names. XBI is full of smaller biotech names to finance their trials. So as rates come down, that financing gets cheaper and easier there. So just consider that XBI is very rate sensitive. And I don't think it's a coincidence when you look at this long-term chart of XBI that is very much underperformed in the last 3 years when we've been in a hiking cycle. But if we start actually going into a cycle where the Fed's actually lowering rates, that sets up better for the XBI as well. So consider that when you're trading XBI today.
Yeah, and I mean that's a great relationship to watch too. So, keep your eye on TLT, because it's done okay considering rates have been moving higher. So if you start to see TLT bounce and start to kind of move back up, I think this is a great trade to keep your eye on. Because I think if you just get a little bit of a relief bounce, you might begin to kind of see this break out of its range, which right now it's right at the top of this range, and I think if you see that, you'll get the little push that we're looking for.
So 1 minute here. We're going to get Mark here in just 1 second. Entering our second hour here at Pre-Market Prep. So I just want to say stay with us here. We don't know how long we're going to do this, but we've had some pretty good feedback. They kind of like the 2-hour segments here, the 2-hour show. So we're going to stick with it for a little while here. Obviously, it gets a little bit complicated when me and Christian are trying to trade the open. Joel is going to be back here to help with that as well with this show. But let's go grab Mark Chaikin. We'll get him on here 30 seconds here early because it's been a while here since we've seen Mark, and I'm excited to see what Mark has to say.
Let's do it. Let's roll that guest intro again. That again, Josh set up. Shout out Josh for that. And then we'll catch up with our man, Mr. Chaikin. All right, Mark PC, Mr. Chaikin, welcome back to Pre-Market Prep. How are you doing today?
I am doing very well. It's good to see Christian on. I don't think I've ever shared a screen with him. That's great.
How you doing, Mark? Good to see
I'm good. Last time we talked, I was in Italy.
Yes, very nice.
Long time ago. Dennis, welcome back to a good place. So happy that you're here.
Yeah, Mark, it's been a while since we've talked with you, and we've been friends for a very long time, so I'm excited. I see you. I feel like I see you all the time because I see you on CNBC all the time with your advertisements there.
The ads are just pervasive.
It's great, though. I feel like you're right here with me all the time, so you're overlooking me, the little angel on my shoulder here. Mark, What are you seeing in the markets here? Let's just talk markets overall. Obviously, we have the new president here. Talk about maybe Trump setups here going into the new year. What are you looking at in the markets right now?
Well, I was looking for 5,800 to 6,000. That hasn't changed in the 2 months that we have not been talking. And here we are post-election, which is when the market normally gets the tailwind. You're also going to get a tailwind from corporate buybacks as you come out of the blackout period. So I suspect we're going to get up towards 6,200 by the year end. And in terms of a Trump trade, clearly the market spoke yesterday, deregulation, lower taxes. You had a huge move in the consumer finance stocks. And in fact, we took one of our favorite stocks, Capital One Financial, off. We took profits in it 46% in 5 months.
Wow.
And it spiked up about 14 or 15% yesterday. Just felt like there was an overreaction to the upside in some of these consumer finance names, credit card companies, American Express, you name it. The more highly leveraged they were, the better they performed. So I do think those stocks are going to work higher. But when you've been sitting in a position for 5 months and suddenly they give you a gift like that, we decided to take it off the table. But the banks should benefit from a sort of deregulation trend. Surprisingly, I see that J.D. Vance likes Lena Khan, the FTC chair, which is a little disquieting because that means they're going to keep trying to break up our big tech giants that have really led the way in the worldwide revolution. But bottom line is cyclical stocks. So looking at financials, still technology with a focus on software, and definitely stay away from the defensive stocks.
Yeah, and I mean, it's been a little bit of a risk-on market here, especially obviously since yesterday here, and you can see, the defensive names, XLP breaking down considerably yesterday. So kind of the tale of two markets here. So taking a little bit of profits here, you were talking about, on these big spike ups here. Would you look to re-enter on pullback some of these positions though? Because like you said, maybe Trump going forward is good for the financials. So even if you're selling financials into the spike, would you be looking, to maybe add on pullbacks?
Oh, definitely. This was just one that is highly leveraged, and but we're holding on to bank and insurance company positions in our various newsletter portfolios, like Bank of New York, like Berkeley, like Mercury Insurance. With financials were benefiting from the rate trend. Not sure we're going to see much more in the way of rate cuts now that Powell realizes that he's no longer going to be in that chair come January. So wouldn't surprise me if we did not get a rate cut. Certainly if we get a 1/4 point cut, that's it for the year, in my opinion. And then we'll see who Trump appoints and what their view of the economy and the Fed's role is. But I think there are a lot of stocks to be bought on dips. Question is, I heard one of your previous guests, I don't know if it was Christians, talk about being at the top of the page. You've had a lot of stocks that have gone from lower left to upper right in the last 3 to 6 months. And you'd hope you got a chance to buy things like PayPal on a pullback, which I think is a very attractive name.
There is an interesting story here because it's obviously underperformed for a number of years, but perking up here in the last 3 to 4 months, it's actually gotten a lot nicer here. You can see on the chart when we were down here at $57, $58, it seemed like forever. It seemed like this was in the range 55 to 65 for like 2 years. But we've broken out of that. Now we're up above 7. Now we're continuing to get higher. And I mean, obviously with yesterday's news, with Trump coming in, probably not bad for a stock like PayPal here either. What about Square, its brother-in-law there? Do you like this one too?
I have to take a look on Chaikin. Yeah, it has a bullish rating. I think we call that block now.
Yeah, I never change. I still call it Twitter. I still call it Square. I still call it
Google. I get it. Yeah, I mean, that's broken out above a triple top in the 75 area as of yesterday. So your low was 55 if you just use a standard measured move concept that gives you potential in 95, and the power gauge is bullish. And these stocks have been under accumulation in shaken money flow, which is part of a new, the sort of theme of a new service that we launched, going back to my roots in the early 80s. Smart money will show you what they've been doing. Give you another example, ENVA. I didn't even know it. I asked our analysts to look at it yesterday,
Wow.
before 2 days ago, before the move. Consumer finance, highly leveraged, up 11% yesterday. Not recommending it here, but these stocks have been raising their hands and saying, pick me, pick me. And if you were lucky enough to be there, then there's still more to come in some of these names.
Maybe these are the stocks you're looking, if you get a dip, you get a pullback here, having, a list of these names ready to go as opposed to chasing them, because obviously, it's had a huge move yesterday. It's up 10%, but, there's just so many stock charts that look like this right now, where we had the big gap ups yesterday, and it's like, do I chase? Do I not chase? Do I wait for the dip? I've never made a lot of money chasing in my 25-year career, so I always naturally want to buy the dip. But I think the stocks that were moving yesterday are probably ones you want to have on your shopping list.
That's exactly right. And, you had a very nice report from Qualcomm this morning, which has
Beautiful.
been in a sort of basing phase under its long-term average trend line. And that may break out. So I think there could be a resurgence in technology as we head into the new year. I mean, you also have to look at what the institutions are going to be doing between now and year end. There are a lot of them that are behind the performance curve relative to the S&P. So you got to believe that they're going to be trying to play catch up with some of the stronger names that are showing themselves here. And I mean, there are so many stocks that you want to buy. Give you an example of why they're not that hard to buy. We had 9 out of 10 days leading into Monday with negative advanced decline readings. Extremely rare. And the damage wasn't really that apparent because the Magnificent Seven was sort of holding up the S&P, led by
Right.
NVIDIA. So I think people didn't realize how oversold the market was heading into the election. In 2016, you had a pretty decent, close to 5% pullback before that election with Hillary and President Trump. But this time, the damage was under the surface. Percent of stocks in the S&P above their 50-day average dip way down, and advanced declines more broadly. And so there are still a lot of stocks that are buyable in spite of the spikes that you had yesterday.
We had to your point. I mean, it's a great point about breadth. Also, when you look at something like the S&P 4-week new highs versus new lows, we had about 2 weeks where just about every day there was more new lows than there were new highs. Again, that's not 52-week, that's 4-week. But it goes to your point. It's another gauge of breadth that I look at. But yeah, it was horrible for the last few weeks.
Yeah, Christian, that's a really good point. And in the last 6 months, I've been relying more and more on research that I've read about 13-week new highs and lows.
Oh, okay.
And that is really powerful indicator for anybody who's doing their own technical market research. 13-week highs, much more sensitive to shorter term price momentum, and a really good tell on what's going on in the market.
All right, I got a new one, 13. I'll definitely be watching those. But yeah, I've been watching the 4-week, which I think is maybe a little bit too fast. So
it is very fast. I'll give you one clue on the 13-week. When you get no 13-week highs, which is rare, market is probably sufficiently oversold to look for a buying opportunity.
nice, excellent.
Yeah.
Mark,
So Dennis, what are you
the-
liking here? I got to catch up on you.
Yeah, I mean, again, I think I'm liking all the stocks that were moving yesterday, but I want to wait for that opportunity here where you get a little bit of a dip. Like, I mean, I'm not against, looking at the financials. Certain things you probably want to stay away from here too. I mean, obviously we saw solar get hit really hard yesterday. We saw international markets kind of get hit hard yesterday. You just wonder, where, and we've seen, some money move into international markets recently. Maybe the U.S. markets just pick up the slack here too. But I think, it's hard to bet against mega cap tech, even though I think there's a catch-up trade in some of the smaller names here. And, some of these, like an Affirm we were talking about here earlier, and I'll bring that up. You look at Affirm, and it's going to report here tonight. It's a very interesting report, but here's another one similar to the PayPal story where it's massively underperformed over the last 3 years, but really perked up in the last 3 months. And now all of a sudden a firm starts looking back to, its highs of 2023, and you start thinking, well, there's a potential breakout here too. So maybe some of these smaller tech names that have actually underperformed the mega cap tech names, maybe it's their time.
It may very well be. Remember, you've got sort of a reverse indicator with Goldman Sachs getting out of the personal finance business by selling off those expensive acquisitions. So there's your contrary trade. You're now seeing stocks like Affirm, Square starting to break out within a reasonable window of when Goldman Sachs exited that business.
Mark, can I ask what your opinion is on Robinhood, or what the Chaikin gauge says about Robinhood? Because that also has a little bit of a crypto spin to it as well.
Robinhood has had a bullish rating. Let's see if that's changed. I doubt it. I think it's very bullish. Our rating turned bullish back in November of 2023 at a price of about 10. So it was on this move all along, and just in the last 3 months, Chaikin money flow has been all green. So when that stock went above its long-term trend line at about 22, there was pretty heavy buying, and you got to believe it was institutional. And they're doing interesting things with retirement plans, and that's a big growth business. I think that generation is under invested in their retirement. And if Robinhood can come up with IRA offerings that are attractive, and I believe as of a couple of months ago, they had a few initiatives in that area. I don't follow the activity in terms of their products as closely as I would if we had recommended it. But I think there's strong upside in Robinhood.
It's been an unbelievable mover. I think the 24-hour markets here too kind of help them as well. Like there's so many people who the younger generation that love this being able to trade at midnight, like where me and you, Mark, might be sleeping. This younger generation really likes that. And that's a lot of their clientele, is a lot of younger generation there. So the 24-hour markets, I think, really help them too. And if you look at, even when the move started, I'm not sure when they announced 24-hour markets, but it feels like it coincides back when the stock was like $10 or $12 and it's been moving up to. And then the comeback, the biggest thing is this is crypto trade as well. And the comeback in Bitcoin from where we were in 22 and 23, has really driven this price as well. It's been a great story.
Yeah, really good story. I mean, one name that's never wavered and never dropped below its long-term trend line in our work is Zebra Technologies. And I think I talked about that a minimum of 6 months ago on the show, Dennis. Yeah. This is a sleeper AI play where they're taking Qualcomm chips, putting it into the handheld scanners that you see in supermarkets and warehouses, and giving the floor managers, the inventory people, the ability to leverage AI without connecting to the internet. It's pretty amazing. And so, reordering papayas or avocados when they're running low on them now is an AI assisted function. So Zebra is another stock that I want to see pull back about 5 to 10%, but I don't know. Here's the thing. If my market view about what's going to happen between now and year end, which is totally based on the momentum that's built up in various ways in the course of 2024 and the presidential cycle, which basically says after the election, you typically rally into year end, you may not see pullbacks that are comfortable enough to buy. And if you do, it may be in the stocks that you don't actually want to buy, but that's a different psychological.
Well, that's it. We were talking about this before we came on the show, just the setups here. If we're starting to move into a momentum market, which it looks like we might be, you actually have to do setups that chase stocks more than, just sitting there and waiting. So, I like checkbacks, and often, talk about the big move and the gap, and then the little checkback, the little pull down. I mean, even what Tesla recently did, and obviously Tesla's recent move was driven by the election, But I mean, you can look, after the earnings here, we had the big pop up, the run to 270, and then you had the 4, 5, 6 days where you're pulling back, comes back down to 240, or it gives you a shot before that continuation of the next trend again there. So often you see that big move, wait for that little bit of check back, and that's often your opportunity to maybe get in as profit taking is occurring in the stock, and then it's a continuation of the recent move, which is what we've seen.
Yeah, historically, when we've had an earnings spike, that really, I don't think, well, maybe that was an earnings spike, but let's say you had a gap. Typically, when you gap up above an upper volatility band, you'll get 5 to 7 days of sideways to down movement, and that's all you get. And that's what you saw right there. But it's a different kind. This really wasn't a breakout in terms of a gap, but it certainly has the same pattern that we're talking about.
Couple more just to finish you off here, Mark. Energy has been a big story, obviously. Nuclear energy has been a big story in 2024. Solar energy, the opposite story, as in 2024 as it's went down here. But just talk about the energy trade here. Does this continue? Your names, do you have a couple picks here that you still like?
No, we've really, Power Gauge has been very discouraging of being in energy. Really very few bullish names in the large cap energy space. In the S&P 500, only one stock out of the whole complex of 21 has a bullish rating. 5 have bearish ratings.
Which is the one? What's the one that's got the bullish rating?
Let me click on it. TRGP, Targa.
Yeah,
looking at oil.
That's been the outperformer in the group. It's been a monster.
I mean, there was a nice play, and you got a spike up yesterday in Fluor, which reported, and that's sort of an infrastructure type energy play. But the big names are just not there. Let's see if we can. Yeah, so we have not been in energy at all, but let's go into the subsectors and see if there's anything to look at.
What about BTU? I was looking at another type of Trump trade is the coal stocks, which again, like I haven't been looking at these names too much, but you kind of just think about like what could really move. And look at the move in BTU yesterday, which again is a play on coal. But that's a nice breakout of even if you zoom out there a little bit, Dennis, too, you could see. It's a pretty nice breakout of a range.
Yeah, BTU, CEIX has been my favorite in the energy sector, and again, it responded up 12% yesterday. So not exactly cheap on a short-term basis, but that's been everybody's favorite coal play.
Yeah, that's a good one, and that's that's out to new highs too. So no resistance for you.
Yeah, I mean, you can't overemphasize something that Christian just said. We're heading into year end. Hedge funds have underperformed, and you got a lot of stocks with blue sky ahead of them, meaning new highs, not just 52-week highs, but new all-time highs.
I mean,
where's the selling going to come from? And add in corporate buybacks. I don't want to go crazy, but certainly 6,200 on the S&P is very, very doable.
I was listening to an interview by Stan Druckenmiller, who's one of the greats. He did an interview. I think it's pretty fresh. It was about a week ago, and even he's never had a down year, and he was talking about support and resistance, and he was explaining what that means. And when you have resistance, you have people who have been in the stock before, and they've been waiting to get out for the price to get back up there to sell. So when you don't have that cap or that resistance, right, you don't have that overhead supply, people that have just been standing there and waiting to sell. So I thought he did a great, from one of the all-time greats, did a very easy technical analysis lesson about, what that means, a breakout versus a name coming back to that previous high.
Yeah, and another way to look at that's a really good point, Christian. In Justin Mames's book that was published around 2000 called How to Sell, he said never short a stock making a new high because you have no place to put your stop.
Yeah, it's true.
Boy, has that saved me a lot of money.
And the opposite is true. Stocks making new lows, like buying stocks that are making new all-time lows. I always say when a stock makes a new low, it's time to go. You know, you just, you know, again, and again, on the downside, it can be much worse. And, you know, an awful story, obviously, you know, is SMCI. And we can just look at that again, which is bouncing a little bit from the lows this morning. But this stock has just been an epic disaster. You know, they can't get that filing out there. The auditors are quitting. They don't know if they can believe the books. You know, this story, you know, went from, you know, that one of the best stocks in the first half of 2024 to one of the worst stocks in the entire year. So unbelievable turnaround here. But when you can't believe the books, it's hard to buy a stock.
Yeah, I mean, one of our analysts, Pete Carmesino, one of our editors, as they were putting it in the S&P, he said, Mark, I've got hedge fund friends who are looking at the 10Ks, 10Qs. He said, they're doing business with family members. It's like they're passing paper. This was back in, I'm going to say it was March. He said, because I don't think anybody has talked about what the auditors saw that they didn't like. And
No,
I commented, if Ernst & Young resigns from your accounting gig, you really got bad stuff going on, because
oh yeah,
they don't want to give up an account.
Hey, hey Mark, I've got, sorry to change the subject.
Not at all.
Any industrials that you really favor that have a strong power gauge?
Tons.
Because it did break out. I mean, that's another group sector that, boom, like right out to new highs. You know, after digesting.
Let me just run them down because I don't want to miss the good stuff. But yeah, we've had a couple in our portfolios like Generac, which I think is still a great buy with all the severe weather. You know, industrials now is a funny group in the S&P. Leidos has been one of our best stocks in 2024. Triple M has a bullish rating now, which is a name you almost never hear.
And they had good earnings. They had a little bit of a bad reaction there, but you know, that's one. And again, like, you know, I think a good point, because they had good earnings and they're not extended too. It's a great name.
Right. And then I think there's still a huge play in power generation for AI. And so Carrier, Train, Fix, Comfort Systems, all air conditioning related for data center build-outs. You know, that play got over-owned back in the fall, or back in the summer rather, as you got the July tech peak. But I think there's plenty of room over the long term for any company that's involved with helping to build data centers, or at least generate the electricity for data centers to run cool.
Well, that's awesome, Mark. I mean, it's so glad to have you back here. Obviously, it's been a while since we've seen you, so keep in touch here. Let us know what you're thinking, you know, coming into the new year.
All right, I'm going to give you one stock. We've recommended.
Hey guys, how you doing?
Joel,
What's going on?
he just snuck in on us out of nowhere.
Mark,
Look, where are you? I've seen that background
Appreciate
before.
it.
Hey, Joel.
Appreciate it. Thanks for coming on.
Hey,
he wants to give us one stock. Mark wants to give us one stock. Give us the one stock.
I recommended it about a month ago in our sort of innovation newsletter, and then again about 2 weeks ago. Wildly volatile. Aurora Innovation, AUR, self-driving long-haul trucks. They were supposed to launch, and it has a bullish rating, which is because they've never made any money, and that's almost impossible in the power gauge system. They've run 7,000 loads between Dallas and Houston, 2 million miles, no accidents. They were supposed to launch and go live in the fourth quarter. That's now been pushed out to the first quarter. These are brilliant guys who came out of Waymo, Tesla, and Uber. And they've been working with PACCAR and Volvo, who are two of the three biggest truck manufacturers in the United States. This is amazing. It's absolutely amazing if it happens. And obviously one fatal accident and the stock will blow up. But they're sitting on enough cash to get them through the next year and a half to 2 years to launch. But this is a play on the need for for drivers. We're going to need 1,200,000 drivers in America over the next 10 years. The cost of the driver.
What's the symbol on that one, Mark? And we'll check it out.
AUR.
AUR.
And when we have 5 people, I don't know how to. There it is. I don't know how to show.
Yeah, I mean, it just had when they announced that they were delaying the launch, the stock dropped from a new 52-week high.
on the charts?
Yeah, I'm doing a pretty good job.
Gosh.
Let Mark keep
All
talking.
right.
We're gonna let Mark go in 1 second. Give him his minute.
Yeah, so this is one of the rare sort of big boom potential stocks that I've ever recommended in our market letters. I may have bought 1 or 2 myself, but this, and I have bought this, by the way, on that dip. This has just maximum upside if it works. And, you know, they've got great technologists. They just raised enough capital in the public markets to keep them going. And if you can buy this on dips and you're willing to risk 50%, because it's almost like buying an option, the market cap is about $8.5 billion. So there's huge upside. And by the way, this is being run like a software company. They're charging not for the technology and not for the installation, but on a cents per mile driven basis. So it's almost like a SaaS model. Really interesting stock.
And that's Mark. And that's been Mark Chaikin. So we're gonna let you go here, Mark. Thanks for coming on here. I've got to go trade the open. Christian's got to go trade the open. Joel and AB are going to take you through the open here right now. But I'm going to be sticking with you. I'll be back in a few minutes. I just got to get out of some opening positions.
Great show,
Thanks,
guys.
Mark.
I like the format. I like being on with Christian. That's just great.
Likewise.
Mark, we always appreciate you coming on. We got to get you back on again soon. We will chat soon again, guys. That's Mark Chaikin. You see him all the time on CNBC. You're going to start seeing him again more here as well. Mark, have a great rest of your day.
You too.
All right, Christian, man, thanks for hopping on and hanging out with us again today.
Take care, guys. Don't forget that press conference Q&A, Powell. Have a great day, everybody.
Been a rock star with us this week, Christian. All right, Dennis, good luck trading the open. Joel and I will take over here. Joel, how you doing this morning?
I'm doing well. I was doing a little decorating, over the last day or so. So I hope you guys like the new digs. I got the piano
what's the best song you can play on that piano over there?
Twinkle, Twinkle, Little Star.
I know that one. That's a good one.
Or Hail to the Victors. So what are you guys doing to the market? What are you doing to the market here?
Are we leaking?
No, not at all. Not at all. But I thought I would come in here. We're 3 minutes for the open. Did we have some wicked movers there? Is there? Do we want to do some ticker time? Is there any stocks you guys?
There's a couple of earnings and news items that we haven't gotten to yet. So I'll go ahead and give some earnings reports. Let's go to Take-Two Interactive, one of the biggest video game companies out there in the world, reported yesterday after the close. Let's see. We saw EPS of negative $2.08 that missed by $2.49. Revenue of $1.35 billion that missed by $70 million. So you had a double miss there for Take-Two Interactive, but they did give some positive numbers as well. Net bookings came in higher than expected. And then you also had, let's see, did they give? They talked a little bit about the new Grand Theft Auto, which is one of the companies.
When's the next? I mean, I can't wait for the next Grand Theft Auto to come out. When's that supposed to come out again?
Well, I don't know. It's been about 10 years since the last one came out, longer than that. Let's see what the new release on track for fall 2025 release. So about 1 year until Grand Theft Auto 6 comes out. So that's going to be like the big question mark for Take-Two, because if you start hearing about more and more delays on Grand Theft Auto 6, the stock will continue to get hammered. Of course, the company also owns 2K, which is the big like NBA game and stuff like that. So the stock's up 4% after the report, despite the double miss. And, I think you look at some of the other video game companies out here, and Take-Two's valuation seems somewhat reasonable. But again, that Grand Theft Auto 6 just facing so many delays, that's the big question mark.
All right. Good day to report, huh? The last couple of days have been excellent days to report. So the double miss, but they like the guidance. Nothing, no bad news. I mean, right now, what I'm looking at early here, pre-market high. I know these aren't the regular charts here, guys. I'm doing my best. 175 is pre-market high. I'll look at that for a potential target. After that, it really opens up on the upside for at least another $2 to 176.82. So right there, boom, you just went through the pre-market high. If that's the New York Open. So if you're looking for more here, as I said, what closer to 179 looks like your next resistance point. I just signed on here. Are we at the highs of the like to always see follow through on the pre-market session? And I assume we are trading, off that just at the highs of the pre-market session. So making new highs. I mean, what do you think? AB 6. I mean, we hit 6,000 today. I mean, why not? It's only 21 handles away.
Yeah, why not? I mean, this market, a lot of things, and momentum is one of them. And so you have this positive momentum going. I don't think that really dissipates today for no reason. Of course, you do have the Fed announcement at 2 p.m. The consensus is a 25 basis point cut. More importantly, you'll have Powell speaking 30 minutes after that at 2:30. So, I don't.
Did you guys talk about that at all? Like, did you guys? Because it's like 158% chance that they're going a quarter, right?
It's a 99.1% chance. So 99 times out of 100, we're going 25. There is still a slight chance that they go 50 basis points, but I don't think that's going to happen.
50? No. They're not going 50. If they're going 50, then I mean, I don't know what the heck they're thinking. This is an early call on this with I know I've been poo-pooing, lowering rates because the market's doing so good. I think they come out, they go to a court, they do their quarter, but they're a little hawkish. There we go. Boy, we're just blasting new highs here, man. Just nothing but bids here. And you know what? I can't find any resistance for you guys here because there absolutely isn't any. But I think they come in and they do the quarter that everyone wants. And then I think he says, hey, we're gonna see what happens here. We're gonna wait, and it's not gonna be that imminent, a quarter, then we're going another quarter, then we're going a half. I mean, boy, oh boy. And if I was at that press conference asking questions, I'd be saying, what's the bond market trying to tell you here, Mr. Powell, about future inflation? But I think they do their quarter, they make everyone happy, but they back off and they're not, I would say hawkish. Can I use that word? Can anybody say anything like non-bullish? I'd say they come out slightly hawkish.
I mean, and what we talked about earlier is that I think even for the Fed officials right now, I think there's a lot of question marks about, what's exactly going to happen policy wise. How are these, policies, if enacted, how will they impact inflation and things like that? So I think the Fed's in a spot right now where not only are they data dependent, they're dependent on, they're going to be kind of like just sitting on their hands until we get a little bit more clarity of what, economic policy is going to look like moving into the new year. So, just certainly an interesting time for the Fed to be making this decision. Going to be interesting to hear Powell's thoughts. Obviously there will be questions asked about Trump and the election and everything. So maybe some more clarity there. Going over a couple other stocks that we did.
Yeah. What else you got for me? I see that I hope you didn't jump the gun, folks, there and take two at 175 because boom, you went to 175.39 and you had a quick $2 pullback after to 172.90. So with that pre-market high, hang it, was a good level. Triple D is back. You're back.
I am, and it was a bank disaster here on the open. I could see it just materializing quickly, and I had to do some quick scrambling here. Holy, JP Morgan down 1.7%, Wells Fargo down 1.8%. So the banks are giving back. They had such huge gains yesterday. I guess everybody got the memo to take profits here this morning. So despite seeing the S&Ps show some strength here, IWM very weak, banks very weak. Oil very weak here this morning. Sector rotation, just it's literally half red, half green. So if you're looking at the S&Ps and saying, oh, the show goes on, it is absolutely not the case here. Caterpillar's down $2 here right now. Everything that was a lot of stocks that were very, very strong yesterday are very, very weak here this morning. So you're getting a little bit of a check back here. Maybe that's a check back to buy, but I'm not striking this early here because there were such big moves there yesterday. Just, go into that banking sector. You can look at the XLF overall if you want, open at the high tick, and we've been leaking here. Now, again, in the context of where we were yesterday, this is just a small little, looks like a little blip on the screen, but it's significant moves, and you're seeing JP Morgan down $4.
Well, you got the catalyst for the JP Morgan, right?
What's that?
Baird cut it to sell today.
Did they? I
Yeah.
missed that. Let's go look.
Did you miss it?
We haven't even got to really the ratings that much yet. I'm trying to find. Yeah, Baird downgrades to underperform. Good call. Joel's all over this.
Jeez,
Baird
man.
analyst. I get the notes
You guys
though.
were sleeping. Yeah.
Baird analyst David George downgrading JP Morgan from neutral to underperformed. Urge clients to take profits in JP Morgan shares. We believe current prices offer a poor risk reward, and we see limited upside of the stock here. Wowzers. Holy, we missed that one. That probably maybe put a little hit on the whole banking sector there, because that's a pretty bearish note. This is why we got to have Joel. Joel, you take 2 days off right when we're trying to launch our new platform here. At least he came back here. I was like lost without you.
No, I got that. Boy, I tell you, I can't really say anything about this Baird guy because I've had this. What was the bank meltdown? Is that going to be like 2 years ago? Right? That we had like the regional.
Not
bank.
even March. I think it was March. If we go to KRE, go out to the long-term charts, and you can definitely identify from there. I'm thinking it was March of 2023. So I guess we are going on. You're right. 21 months ago. 21 months ago. The time flies when you're having fun.
And I got this puppy at like 130, 135 or something like that. And I know, Dennis, don't go into the whole story how I talked you out of it at 30. I wanted to sell this thing at 200. And then yesterday, I just pulled up the quotes. I see 245.
240. Crazy move.
I don't even know. It has to be more than that. There has to be something with what they think the Fed's going to do. And plus also these moves, there's always checkbacks, right? Goldman's down 372. So,
a little bit of profit taking. These were huge moves. Even Mark saying on the show, he had Capital One Financial and he rang the register. When your stock pops 20% in a day, it's hard not to ring the register, especially when it's a stock like Discover Financial or Capital One. These stocks typically move $2 a day. These 15, 20% moves are like what you want for the entire year. So it's very hard not to take those gains into that. Now, I don't know, when you get a change of administration and banking, regulation going to be a little bit easier going forward, it is probably better for all these companies. So it just felt like a little bit of the moves here, definitely a little bit maybe overdone yesterday. And that's why you're seeing some profit taking coming today. And to Joel's point, JP, you get an analyst downgrading to underweight. Yeah. Everybody takes note of that.
And also, it just, I'm not going to go through all the individual charts on this stuff here. Oh boy, what did I do there? So the only thing, and
I like this setup too, like showing this. This is a better, cleaner. Like we always just show the couple of charts. I actually like what I'm looking at right now. Really? Chat, let us know. We're showing some different stuff. You were seeing my IB charts here. I love this little look that Joel's got going on here. We're seeing the markets move on the side. We can see the quote screen here a little bit. We're seeing, the charts pop up here. I actually like this look. Yeah, when you blow it up and get rid of our ugly mug shots out of there, it looks even better.
Yeah, well, this is, I think I've showed this before with, my setup, what I like to look at, the top components of the S&P, but I'm a little bummed because I have last net change, net percentage change, but in real life, I have open, high, low, and then the volume, but working on limited screen basis. So I want to get some tickers in. Smelly Intelli here. Up, wow, 25 and a half here. Where's the gap in this thing? Here, let me go to my daily. I don't have as many charts here, but I think we're in no man's land here, Dennis. Aren't we on this one?
Well, we talked about Intel yesterday. And you know what? We had a lot of good calls on the show yesterday, and this is another one as well. We talked about this Intel as being a Trump stock. You know, if you're thinking you're, you know, like chips, you know, like we need to make, you know, maybe move away from the dependence on Taiwan Semiconductor. That's what Intel's trying to work on. So it's not out of the realm of possibility that they're going to get more funding from this new administration here. And I have Intel as a Trump stock on mine. It gave you an opportunity yesterday. We were talking about it around 25. It dipped all the way down to 24. Now the buyers continue to reemerge. You're in a breakout zone here. You're gapping into an area here. But I think pullbacks on Intel to be bought. Kramer also has been tooting the horn saying the Intel bottom is in. Me and Joel still long this stock. I'd consider adding to it. I've just been burned adding to the stock before, though. But Intel looking good right now.
Yeah. What the heck did Lyft do? Did Lyft give a false report again?
Oh, remember that? They gave the wrong numbers. And they added a 0, and it went from like 15 to 20. And then, no, it's for real here, I think, this time. AB, you got those Lyft earnings?
Yeah, Lyft reported an EPS a loss of 3 cents that beat the loss of 4 cent estimate. Sales came in at 1.52 billion, that beat the 1.44 billion dollar estimate. They raised guidance. They see gross bookings coming in at 4.28 billion to 4.35 billion. Stock is up 30%, which is actually about the same as it went up after that false report. And if you guys remember, it came down and then basically got bought back up to where it was after that. There was an error in the basis points of the growth. They said 500 basis points growth instead of 50. Either way, Lyft is trading higher here this morning. Uber moving along with it is up. Uber's actually down today. It was
Uber's turned and went down now and went south. I mean, they liked a lot of things that Lyft was saying here. Oh, I just don't know. I don't know if it's a stock. You're up here at 20. You know, obviously we know the one issue I've got here with Uber and Lyft is that Musk is all of a sudden in the driver's seat, pun fully intended here. But, you know, with his association with the Trump administration, it's going to be easier for him to push ahead FSD in a lot of, it's going to be a state by state level, but think of all the red states. All those red states, is going to be easier for him to get that regulation too. He just, you know, played his cards so right here. And that is going to put pressure on Lyft, and that is going to put pressure on Uber. So it's a nice pop. It's a nice earnings lift here. I just can't see, you know, and getting into that 18 to 20 area, I don't want to chase this one. Even though, you know, there's room to 20, you know, maybe if you're in it, you could give yourself a little bit of room, but I'm hesitant to chase this one. I think the setup for it isn't that great.
Didn't Lyft go to 20 on that false report day?
And then it pulled back. Yeah, we were talking about that.
Back. Well, I'm just looking from, I mean, it's straight up from the open. Triple D, what do you have for an opening print there in
1776? So it gapped up, and then we've continued, obviously.
What's
we're up
another
70 or 80
around there too?
Pardon me?
Is the low right around there too?
1740. So we opened at 1776. We dipped a little smidgen for about a split second, and then we've been blasting off here too. And I mean, the S&Ps continue to be strong as well. You know, we can talk about the pockets of weakness, which the banks and the oil stocks are definitely weak here this morning. Some of the cyclical names too, you know, industrials, a few of those are weak here too. We have pockets of weakness. Airlines are a mess here today, which is interesting. You know, often when you see oil, although, you know, when you see oil down, usually the airlines are up, but that's not the case. But when you come back in here, you look at the S&Ps, you've got tech's rallying here this morning.
Yeah,
the news are very strong. They're picking up tech.
Wasn't there some bad news earlier in the week? We were talking about the Apple suppliers, right?
Yeah.
CRUS and everything. And what did just hold this 220 area? Yeah.
We've talked about the resilience of Apple, and I mean, people use this as a cash position, almost like that they think, you know, they're just safe in this one. And, you know, it's been the case. I mean, Apple is probably, look at the beta. You think about mega cap tech, and you think about the wild moves, you know, you've seen in like a Netflix, you know, Amazon, Meta's had some significant moves here. Apple in itself is kind of just steady as she goes. You never seem to get the big down moves besides August 5th when the carry trade was coming off for the one day. But if you eliminate that, you know, Apple is just kind of steady as she goes. It's been in a range here for a while for the last few months, but people just will not give up on Apple. Even though the valuation's as high as it's pretty much ever been at over 30 times earnings, people just don't give up on this stock. There's so much cash. You know, people do not, you know, give up on the iPhones. They're right there. I mean, this is just almost a staple at this point in time.
You know, what was a good tell, Dennis, and we talk about this a lot. And if a stock doesn't go down on bad news, right?
Yeah.
Then it's a good sign. Came in Monday morning, I believe, and Uncle Warren unloaded. The thing was down like 80 cents. It was down a buck, and you're like, holy mackerel. Usually that has a little bit more of a thing, but Warren's up there too. Just like oh boy, they mopped up Bezos there, huh? At 200.
Yeah, they did. The Bezos wall right now is down. I'm going to say keep an eye on your SEC filings, because if he files to sell more stock again, they will hit the stock on it. But right now, they think he's one and done, and he didn't sell any stock yesterday. We haven't seen any more filings coming from Bezos. So at this point in time, they're hoping that the Bezos wall is gone, and I'm hoping it as well. I have Amazon long and my wife's RSP and my own RSP. Love the company. The valuation on Amazon, as much as Apple is as expensive as it's ever been, Amazon is as cheap as it's ever been from a valuation perspective. They're both trading 31, 32 times. I mean, Amazon still has growth. Amazon has, obviously it's a huge company as well, and the growth is slowing. But, Apple's really not had much growth here for 5 years. It's all been just buyback stories in Apple. So, a different story here. I think I'd much rather own Amazon than Apple, but
You've been saying that for a while.
I wish I would have bought even more. So I bought on the August 5th day. I bought some shares and I picked it up. I didn't get the low at 151, but I picked some shares up at 160. And I really wish, I would have really backed up the truck and just loaded like 10% of my portfolio into Amazon. I think it's sitting at like 2 or 3% right now. I wish it was as big as Tesla, but I now at this point in time, it's 210. You hope you're wait for a pullback maybe, but right now, to Mark's point earlier, and to Jay Woods and Christian on here, we're coming into a momentum market here where some stocks are getting some pretty decent follow through, although the stocks from yesterday are not.
Yeah, I just think you got to just keep an eye on your closes from yesterday and the previous day's high, and because when you get this kind of momentum going, you really like to see where the mark is, and I see that Amazon up 250 here. I don't have the what the current low of the day is yet, but you just keep your eye on the marks. Your Tesla, Dennis. Someone asked about Tesla here. I'm trying to zero in on maybe some. I mean, you just got to think about 300 on a day, when it starts getting this kind of momentum. But first,
I want to keep building more Tesla, and I've been dollar cost averaging into it, and then I got called away on a little bit of stock rating, some calls. I still think like long term, I think Tesla goes a lot higher, and it's the biggest position in my long term portfolio, and I still want to make it bigger at some point in time. I'm wondering if that time isn't now, though. I don't want to chase it up here, but I mean, he is in such a good position here, and look at the news flow. Like we always talk about headline anticipation. It's a core strategy of mine, and you think about, well, what does Tesla have to look forward to? Oh my gosh, there's so much to look forward to if you're a Tesla shareholder, as we roll into, robo taxis, as we roll into a cheaper Tesla product, that's going to be coming out. The bloody trucks, the semis are going to go into full production here. I mean, that's going to be impressive too. Some people are, estimating, that's going to add billions of dollars potentially, into revenue as well for Tesla. Nobody's even giving the semi any value whatsoever, and we don't even talk about it much on the show. And then you've got FSD, all of a sudden a path to that with the Trump administration and a lot of red states probably gets a little bit easier too. And then obviously in the long term, we got the humanoids we're working on. There's so many cool things.
That's all the good future fundamental news. I'm just going to break it down just real quick technically and just give you my take for today. And my take today is it's not showing great relative strength here with the S&Ps up 23.5 handles. It did take out yesterday's high by 40 cents. Of course, it's still early in the session. But to me, if I can't, momentum trader, seeing the SPOOs up 23 handles, no offers in sight, I would like to see it above yesterday's high or, get a solid 290 bid. I don't think there's probably anything in there until, psychological 300. But I just say a little bit of just relative weakness in that. But it's still going green. It's only 949. The day is still early.
So
what
I'm
do
going
you
to take the exact opposite on this. And again, talking my book, but, you know, also talking the trading. I love the relative strength on Tesla here today. And I'll tell you why. Because all the stocks that had big moves yesterday, like the banks, like the oil stocks, Caterpillar was up huge yesterday, are red. Tesla had a huge move, maybe one of the biggest moves, and it's trying to go green again. So what you have is rotation into some stocks that actually didn't do that great yesterday. Like utility stocks had a terrible day yesterday. They're heavy green here today. You know, you had a lot of consumer staples that had terrible days yesterday. Procter and Gamble. So it's always good to not just take and look at, you know, the SPY and then compare, but look at, you know, why. Lift up the hood and look underneath what's the drivers here today. Staples, very weak yesterday, huge driver today. You know, you have utilities, very weak yesterday, huge driver today. You've got, you know, some tech stocks, you know, that were, you know, not really that great yesterday. Yes, Amazon was good, but, you know, they're showing a lot of strength here too. So I think what you're seeing is, you know, a little bit of, you know, of mean reversion from some of those trades that were really strong yesterday. The banks are absolutely hammered. And then you have Tesla, which should be in that boat, where it should be showing weakness today because it seems like a profit-taking day from the stocks that were really strong yesterday, trying to hold up and go green. So keep an eye on that. I actually think Tesla's doing pretty well compared to the banks, compared to the oil stocks, compared to stocks like Caterpillar that are down $3 here right now because, you know, it was a huge move yesterday. I think it's digesting the move really well.
Well, just I'm just looking at some of the other tech stocks here, and you know, Apple up over 1%, Google up nearly 1%, Amazon up 1.5%, Nvidia over 1%, Meta over 2%, Qualcomm 2%. I mean, I'm just looking at relative to the other, you know, Magnificent Seven and the S&Ps as well. But keep an eye on that. I mean, 290 bid. It catches a strong 290 bid today. I mean, there's probably someone just trying to piece out of some stock at 290. I mean, just
a lot of money made
in
yesterday in this. A lot of money made in this yesterday.
Yeah. Yep. AB, what else you got what do you got on your radar? Did we miss any or did you guys miss any other earnings reports or
go ahead,
we didn't
AB.
talk HubSpot yet.
And it's flying. And I mean, we're into this market where now, you know, the tech stocks are starting to catch bids. This is obviously an AI play as well. Stock was running into the report, gaps up, in for Trump yesterday to a certain extent there. And now we get another continuation and another gap up here. Stock trading up to $648 at the high, open near the lows in the middle of the range here right now. I mean, these are tough trades. These are tough trades because the stocks have really gapped up. You know, it's always tough to chase stocks here. But, you know, we're seeing, you know, a lot of strength and a lot of tech names here this morning.
Nothing in the book here, nothing on the chart until you get up to your January 2022 high. That's 659.24. So that is quite a ways away. Well, no, wait, where did it already trade? Was that in the pre-market? I didn't see that. Boy, that traded up to 670. Was that the 4 o'clock traders there?
Probably. They get really excited, Joel.
Oh my Lord. Wow, 670. Holy mackerel. No, because that was after hours yesterday. That was because I think their earnings came
They
out
reported last night, yes. Yeah, they reported last night. So it is off the highs.
How good was that report, AB?
The report, let me pull up those numbers real quick. We had a EPS of $2.22 that beat the $1.91 estimate. Sales came in at $669 million. That beat the $646 million estimate. Guidance was strong as well, with the revenue guidance coming in above expectations. EPS guidance $7.98 to $8 versus a $7.72 estimate. You had some analysts coming in this morning raising price targets at Bank of America, at Evercore. So all in all, good report for the old HubSpot, up $40.50, 6.7%.
Another stock that's holding on pretty well today, considering a downgrade. We've got Jefferies downgrading Palantir to underperform. I'm just going to open up that note and take a quick look. It's analyst Brent Thill. They're talking about 25 revenues. Palantir, most expensive software name, over 2 times of CrowdStrike. So it looks like a valuation call here. They're saying it's getting ahead of itself. So it says we downgrade Palantir to underperform on the unsustainable valuation and await a better entry point. So they're just saying a valuation call. But you know what's very interesting? Palantir has just been on fire. Stock has been moving. Not down much on this, Joel. Like not down much. Usually you see these ratings to sell on a stock that's up 20, 30, 40% in the last 40% in the last 30% in the last 3 days. I mean, a 1% check back, a 1% pullback here in Palantir is actually quite impressive that it's holding on that well.
You got a kind of nice setup here. If you were, I'm sure this came out before the open, but you had let's see let me go to my daily here and look, because I want to go. Don't have enough charts here. I'd like to have a little bit more, but just going on your daily here after the downgrade, you had you got within. You made a new all-time high even off this today. When did this?
Isn't that incredible?
Yeah,
well, it was overnight. It was down. Like if you look Palantir, if you go to the pre-market chart, the stock was down significantly in the pre-market there. So just Joel, bring that up, and he'll take a look at that right now.
Yeah,
the top chart. We were down here. Joel's bringing it up right now. We were down as low. Joel could grab that pre-market low here. He's going to grab it for us right now. He's trying to work his new setup. Anyways, it was down a couple of dollars this morning. I saw it down a couple of dollars, and it's bounced back. And I mean, there's just people who are relentlessly buying on this stock. It seems like no matter what, it is leaking right now. One concern is, you had the big pop up. They're going to shrug this off too. This is kind of straight down from the open. We're 56. We got up to 56 and a half, and we're now 54.65. So we are on the lows right now, which is somewhat concerning.
Yeah, I just want to look at it from the daily perspective here. And even with the downgrade, it made a new all-time high. What I would focus on here, though, moving forward, wow, this stock really moved. This is a mover. Now, long-term, I think you got to look at that close from yesterday at 55.53. You blew through it by $1 early on. But now that you really distance yourself, people are going to say, hey, is that the best mark I'm ever going to get? So that's going to be your big number. I'm not going to worry about today's high, the all-time high. But you had that close from yesterday, all-time closing high, 55.53 and 55.69. Did you see the beautiful chart on Elf Beauty?
No.
It's been moving. I traded it last night. I actually played it from the short side off 120. Had a good trade off it because it bounced right up to like a major resistance point. I was like, this 120. And somebody was perched there with an iceberg. And I'm like, I think they're going to have trouble getting through that. It was like lifting. I'm like, you don't look like he's moving, he or she. Maybe it's a Bezos wall on Elf Beauty. But 120 just was not moving. I'm like, well, I'll try it short. So, and I was able to pick up a few bucks on the downside just on that. I've been out of my Elf Beauty. You know that I sold it back when Cody disappointed. It was a decent trade for us. I didn't get the entire move from the 103 area to the 118 or 116, but it was a good move. I've been out of it for a little bit, but this is, a snapback, now. And I like the action here. It's holding up really well. Because it was up at 120, then went down to 110, and then you start thinking, oh boy, is this going to give it all back? Back up here at 118 right now. 120 is a big level. It was like a brick wall last night in the after-hour session. So if it does get up there, keep that in mind, because if you got a seller in the after-hour session, a lot of times they show up in the regular session as well.
Okay, 2 minutes here. What else you got?
Affirm. You want to talk Affirm? Multiple people. Affirm reports earnings here tonight. AFRM is obviously a report that a lot of people are going to be looking at. It's got a $7.70 expected move last time I looked. So almost $8 expected move. So this is going to really move here. It is down here today. If you're wondering why it's down, it is a financial company. Financials are very weak here this morning. We got, Citi, Bank of America, JP Morgan still leaking down 7 points here now. Goldman Sachs, Morgan Stanley. Financials are weak across the board. The XLF is down 1%, which is a big move for the XLF. Again, it had such a up move yesterday in the context of, since Trump's been elected, it doesn't seem that big. It just seems like more of a check back, but it's a big move relative to what it usually does. Affirm is pulling back with that as well. Opened at the high tick, caught some traders, and now it's been moving straight down. I do think people will be excited about this into the earnings, so I wouldn't be surprised if for today is if, you get this 10 o'clock turn, which is going to be happening in a few minutes here, and you start to see some traders come in. Trading it's going to be, I kind of want to buy it into the earnings because I feel like they're going to, say some good things, but $7 expected move or $8 expected move, there's major risk here. Might be better to play with options, but then you got $4 premium. It's a tricky one going into earnings.
I mean, you made that high today at 51.60. If you wanted, the recent mark, the high print, was it 50 even? That was from yesterday. So if you're trying to wiggle out, or you get some pop off their earnings, I mean, they're just minor numbers. I mean, that thing moved up from $43 2 days ago to 50. So probably getting just a little profit taking. But it's 10 o'clock here, Triple D and AB. We're gonna wrap things up. If you have not subscribed to this channel yet, please go ahead and hit that subscribe button, and we'll be back at it tomorrow morning.
And thanks for broadcasting live from David Trainer's house.
Yes. Yeah. Well, yeah, Enver used to have this, but
who else had that background?
Enver. I don't know if you remember Enver.
Yeah, and David Trainer, I think, always has that background too. It's a cool.
Yeah, and I think
nice fireplace.
I think Scott. Actually, I'm Scott Red Dog's house. He has the same
Red Dog's had this background too. Yeah, Red Dogs too. That's right. Red Dog's got that background too.
All right, what's on the docket for the rest of the day tomorrow, AB?
AB's pulling the Joel. He keeps having to mute himself because he's got these people outside that are giving him.
Oh, sorry about that. Yeah. What you mean? What do I have going on the rest of the day, just for myself or market bucks?
No, I can care less.
Oh, we can hear what you have for yourself. Sure. What does AB's day look like after he leaves? Obviously I was working for Benzinga a long time. But what's your day looking like today?
I'll probably go, you know what? I'm going to pull up another page out of Joel's book besides the mute trick. I think I'm going to go swim some laps. A good way to, clear my head, get the blood flowing, and, go swim some laps at my local Lifetime Fitness, maybe play some pickleball, do a few, emails that for, some potential job opportunities, stuff like that. So it's I'll say this, being unemployed, kind of fun. I kind of like it.
Well, we got you partially employed here, although we're not very high-paying employers. We're still zero revenue company.
Well, yeah, no, it's still fun hanging out with you guys in the morning. Well, thank you to everyone who tuned in again. Thank you to everyone who stuck with us. We got some feedback in the chat, which is great, negative or positive. Feel free to shoot me an email if there's things you'd like to see us do differently. We obviously have a little bit more freedom now of what we can and can do. So if you guys have any, feedback, things you'd like to see us do, feel free to shoot me an email. And I can forward along to Joel and Dennis. I saw Franz was saying we should put the banners up on the stream. We can do that easily as well. So, thank you to everyone again who tuned in today and sticking with us through this transitionary period. And we're going to keep bringing y'all content.
Awesome. Thanks, guys. Thanks, everyone. We'll see you here 8 a.m. tomorrow.